Confused as how GST hike on used car will work? Here's how a higher GST of 18% will impact individuals and businesses. The GST Council has recommended an increased 18% GST rate on the margin value of used car sales for specified petrol vehicles with 1200 cc or more. Hello listeners. Welcome to our channel Vishwakul. Here we share the latest insights regarding what's the current buzz and how it may impact us. After the GST Council announcement on Saturday, social media was full of posts indicating that the GST would be levied on losses incurred in selling of used cars. Meanwhile, on the need for clarification on GST rates of popcorn, sources have said that the Council's clarification comes after request was received from Uttar Pradesh to clarify the classification and GST rate applicable on popcorn mixed with salt and spices. This issue was taken to the 55th GST Council and the Council recommended to clarify the same. The GST Council has recommended an increased 18% GST rate on the margin value of used car sales for specified petrol vehicles with 1200 cc or more, diesel vehicles with 1500 cc or more, and all EVs. The GST Council also did not specify any new reverse charge liability or liability to tax on vehicles sold by unregistered sellers to registered or unregistered persons. If the seller is non-GST registered, then this above ruling does not apply. However, this is not a new GST rule, as 12% GST used to be charged earlier on such transactions. In any case, most businesses cannot claim input tax credit on purchase of a car even if it's bought in the name of the GST registered business. The only exception to this claim of input tax credit (ITC) rule is car showroom dealers and other specified persons like transporters, etc. who can claim ITC on car purchases. Watch more to find out who exactly will get impacted due to this recommendation of increased GST amount on sale of used cars. How will GST be levied on the sale of used cars and who has to pay it? According to Pankaj Jain, tax partner, EY India, GST would be leviable on the value as computed under the following equation at 18%, irrespective of size type of car. The sale price, purchase value after reducing depreciation as per the Income Tax Act. In case the value is negative, then no GST would be payable. The above is subject to the condition that the registered person selling the car is not claiming any input tax credit on purchase of the car. Samsudha Majumdar, tax partner, Trilegal, says, there is no GST on the sale of used cars by person who do not hold GST registration to another person, or to dealer of used cars. This applies equally to electric, petrol, and diesel cars. Dealers who are buying and selling used cars may take benefit under the margin scheme, offered under the GST regime, if they do not avail input tax credit on the purchase of the cars. Under this scheme, dealers are allowed to pay GST only on the difference between the sale price and the purchase price or the depreciated value of the car if depreciation was availed. No GST is payable in case the margin of the dealer is negative, i.e., the dealer is selling the car at a loss. Amarpreet Singh, Chief Financial Officer, CFO, Droom, says, there are two models in the used car industry: inventory-led model and marketplace model. Companies like Droom are a marketplace model while companies like Cars24, Spinny use inventory-based models. In the marketplace model, the vehicle is not purchased by the company on its books. Rather, third-party sellers or agents purchase or arrange the vehicle and sell it through the marketplace platform. So in essence, companies like Droom connects the buyers with sellers and do not own any of the vehicles sold through its platform. Now if a customer is buying a vehicle from a third-party seller on Droom and this seller is GST registered, then GST will be applicable in this transaction. However, if it's an agent who simply is connecting the vehicle seller with a buyer using the Droom platform, then GST is not applicable if the vehicle seller is a non-registered person. To sum up, companies like Droom do not levy GST as they are following a marketplace-led model. While Cars24, Spinny will levy GST as they follow an inventory model. How GST hike on used car will impact businesses taking benefit of depreciation. There is also a good chance that a business might be claiming depreciation on the purchase of the car. According to the Income Tax Act, 1961 depreciation can be claimed following the written down value (WDV) method. Under this method, each year you deduct a specified percentage of the car's value and take the price down. Like in 2023, if a car is valued at 10 lakh rupees, then in 2024 its value should be 9 lakh rupees if the rate of depreciation is 10%. Calculation equals 10 lakh, 10% of 10 lakh equals 9 lakh. In case depreciation is claimed, then GST to be charged on sale value depreciated value. In case depreciation is not claimed, then GST is to be charged on sale value purchase value. Needless to say, if the margin is nil, then no GST is applicable. The supplier has to charge GST and has to be borne by the consumer ultimately, says Shivam Mehta, executive partner, Lakshmi Kumaran and Sridharan Attorneys. What did GST Council recommend with respect to used car transactions? To increase the GST rate from 12% to 18% on sale of all old and used vehicles, including EVs other than those specified at 18% sale of old and used petrol vehicles of engine capacity of 1200 cc or more and of length of 4000 mm or more. Diesel vehicles of engine capacity of 1500 cc or more and of length of 4000 mm and SUVs. Note: GST is applicable only on the value that represents margin of the supplier. That is, the difference between the purchase price and selling price, depreciated value if depreciation is claimed, and not on the value of the vehicle. Also, it is not applicable in case of unregistered persons. Impact of increase in GST rate for used car sales. ET Wealth Online has asked various experts about what might be the impact of 18% GST on used car sales. Here's what they said. Small cars of engine capacity below 1200 cc and length less than 4000 mm will remain cheaper. Advocate Apor Phillips, Senior Associate, Sir Max Consulting Law Firm, says, old and used petrol vehicles of engine capacity of less than 1200 cc and of length less than 4000 mm can still be purchased by paying 12% GST. For example, Renault Kwid, which has an engine capacity of 800 to 999 cc and length of 3731 mm. So, a second-hand model of this car can be purchased at 12% GST rate if purchasing from a GST-registered seller. The rate of GST, presently, would depend on the capacity and the fuel that the car uses. If the car is a lower capacity small car, e.g., smaller than 4000 mm, GST of 12% would apply on the margin. In other cases, GST of 18% would apply on the margin. Going forward, once the GST Council's decision has been implemented, it is likely that a GST rate of 18% would become applicable uniformly, Majumdar from Trilegal said. Business who claim input tax credit on car need to pay GST on the sale price, not margin. Chartered accountant Bimal Jain, founder, A2Z Tax Corp LLP, says those businesses who are eligible for claiming input tax credit on car purchases, car showrooms, transporters, etc., need to pay GST on the sale value of the car and not the margin. It is only those who can't claim ITC on car purchases, they need to pay GST on the margin. The key point to determine applicability of GST is whether the seller is GST registered or not. For example, a business who claims input tax credit sells a car for 10 lakh rupees but it costed him 8 lakh rupees. So in this case GST will be levied on 10 lakh rupees and not 2 lakh rupees. If the said business was not claiming input tax credit, then GST would have been levied on the margin, i.e. 2 lakh rupees. If an unregistered seller sells an old and used car to registered buyer, no GST will be charged, says Phillips. Chartered accountant Hemang Singla, partner, SBHS and Associates, says, Rule 32(5) of the CGST Rules, 2017 says that the value of supply, i.e. the value of which GST is levied, will be calculated as the difference between the written down value or WDV, purchase price, depreciation as per Income Tax Act, of the car and the selling price of the car. Also, where the value of supply is negative, i.e. when cars are effectively sold at a loss, the loss shall be ignored as it is negative. Dealers like Spinney, Car Deco, etc. usually purchase second-hand cars from individuals who are unregistered in GST and hence can't avail ITC of the same. Hence, Rule 32(5) is applied in all such cases for dealers. However, if such dealers purchase some second-hand car from some other GST-registered dealers, e.g. Spinney purchases car from Maruti True Value Showroom, and if they claim ITC of the same, in that case Spinney won't be able to apply margin scheme on sale of that particular second-hand car and GST accordingly will be levied on wholesales price. End consumers of used cars need to pay 6% more GST. Jain says ultimately the end consumers pay the GST amount on used car purchases if they are buying from GST-registered dealers. The only difference in the amount of GST would be if it's charged on the margin or sale value. If input tax credit is claimed, then GST is charged on the sale value, otherwise if not claimed, then GST is paid on the margin. The earlier GST rate was 12% and now it is proposed to be increased to 18%. Some possible scenarios. According to Chartered Accountant Siddharth Sarana, here are some possible scenarios. 1. A used car dealership is buying a car from a consumer at 5 lakh rupees and then making some value additions of 1 lakh rupees and then selling the car at 7 lakh rupees. This dealership is claiming no depreciation. Ands. According to the CGST rules, only the purchase price can be deducted from the sale value of the car for the purpose of computation of the margin of the supplier. In this case, the amount spent on value additions will not be deductible. Therefore, the car dealership will need to levy 18% GST on 2 lakh rupees, i.e. 36,000 rupees. The 2 lakh rupees is calculated as the difference between the sale price of car, 7 lakh rupees, and purchase price of car, 5 lakh rupees. 2. A used car dealership is buying a second-hand car for 12 lakh rupees and then claiming depreciation of 2 lakh rupees and then selling the car for 9 lakh rupees. Ands. In this case, the depreciated value of the asset is 10 lakh rupees, 12 lakh rupees being the purchase price is reduced by depreciation of 2 lakh rupees, and this depreciated value is higher than the sale value of the car. Thus, as there is a negative margin, no GST will be applicable. 3. A used car dealership is buying a second-hand car for 12 lakh rupees and then claiming depreciation of 2 lakh rupees and then selling the car for 11 lakh rupees. ANS. In this case the depreciated value of the asset is 10 lakh rupees, 12 lakh rupees being purchase price is reduced by depreciation of 2 lakh rupees. The sale value of a used car is 11 lakh rupees. The margin of this supplier is positive as the sales value is higher than depreciated value. Thus, GST will be applicable at 18% on 1 lakh rupees, i.e. 18,000 rupees. GST applies on the profit margin, with the rate depending on the car type. For example, if a business purchases a car at 10 lakh rupees and sells it at 12 lakh rupees to an registered buyer, 18% GST will only apply to the margin amount, i.e., 2 lakh rupees, says Abhishek Soni, co-founder, Tax to Win. Singla from SBHS and Associates explains some doubts in respect to GST on used cars. 1. GST on used cars is applicable only for businesses and not individuals. The statement is false. GST is levied for every business registered under GST Act. So it doesn't matter that a car dealer is selling a second-hand car or if a GST-registered person is selling his second-hand car which exists in his books of accounts of business. Each and every such person will be paying tax on sale of second-hand car, provided the same is sold at a margin. Ultimately, the buyer of second-hand car will bear the burden of GST as dealers or registered dealers won't pay GST from their pocket. Hence, every registered person will be charging GST on invoice when he sells his second-hand car if the same is sold at a profit and the same shall be paid by the person, dealer buying such car. 2. What are the conditions for attracting provisions US 32(5)? A few conditions shall be followed by a second-hand goods dealer to avail the benefit of the rule of margin scheme. A. The supply should be of second-hand goods only. B. Pre-owned goods are not necessarily deemed to be second-hand goods or used goods. The goods should actually be used before. C. The rule does not mandate that one has to deal only in second-hand goods for the purpose of availing margin scheme, nor does it require having dealings in second-hand goods as principal business activity. Therefore any person can go for margin scheme in respect of his business transactions of purchase and sale of second-hand goods. D. Minor processing is allowed. The dealer can carry out minor processing like repairs, refurbishing, reboxing, etc. D. Nature of goods should not change. If different accessories and goods are bought and assembled into a new kind of product, which is different in nature as compared to the goods bought earlier, the valuation rule benefit would not apply. E. No input tax credit should have been availed on purchases. The taxes paid on purchases either to seller or to government under reverse charge, both should not have been claimed as input tax credit. F. Losses cannot be set off. Where the selling price is lower than the purchase price, tax on losses shall be nil and such negative margin cannot be set off for tax payable on other positive margins. 3. A company X Limited which deals in buying and selling of second-hand cars, purchases a second-hand Maruti Alto car of March 2015 make original price equals 5 lakh for 3 lakh rupees from an unregistered person. It incurs 30,000 rupees on minor furbishing and sells the car for Rs. 3. 50,000. The company does not avail any ITC. The value for GST purpose shall be 50,000 rupees, i.e. the difference between the selling and the purchase price of the company. It does not matter that where ITC on minor furbishing or repair charges has been availed or not. 4. Is GST on second-hand cars a new provision or not? Answer. GST on second-hand goods includes second-hand vehicles, has been in place since the very inception of the GST Act. The same has been incorporated from very beginning of the GST Act in Rule 32(5) of CGST Rules 2017. Who can claim input tax credit on car purchase? Sony from Tax to Win says, input tax credit ITC is available if the seating capacity of motor vehicles used for transport of persons exceeds 13. It can be allowed for lower seating capacity for the categories mentioned below. Here are the cases under which ITC is available on motor vehicles. Persons involved in the business of supplying cars or other vehicles. People providing transportation of passengers can claim ITC on the vehicle purchased. Driving schools or persons engaged in imparting training on driving the vehicle are eligible to claim ITC. Will the GST rate hike impact the cost of old cars? Is the new tax rate applicable to EVs? Read below to know the answers to all GST on used cars FAQs. Do I have to pay GST when selling my used car to another individual? No. If an individual sells an old and used car to another individual, GST would not be applicable, reported PTI. Will the 18% GST used car raise its price for buyers? When buyers purchase an old car from an individual, there is no GST applicable on the sale. However, The scenario will differ if they buy a second-hand vehicle from platforms like Cardeco, OLX, showrooms, or a dealer. For example, if a used car platform purchases a small car for 1 lakh rupees and sells it for 1.4 lakh rupees after repairs, then 18% GST will be applicable on the margin, i.e. 40,000 rupees earned. Earlier, 12% GST was applicable on the margin. The move is likely to raise the price of old cars. Some platforms are expected to absorb the higher taxes, but others are planning to pass on at least a part of it to retail buyers, reported Mint earlier. What is the GST on used electric vehicles (EVs? A standard 18% GST is applied to the sale of used vehicles, including electric vehicles (EVs) and SUVs. Who is affected by the 18% GST on used cars? The hike in GST on old cars from 12% to 18% is likely to impact car dealers and platforms which are in the business of selling used cars. This move to harmonize tax slabs is likely to impact startup margins in the short term, even though they will be able to offset this against input tax credits, reported Mint Samiksha Goel and Sneha Shah. The proposed amendment by the GST Council would likely bring down the cost of used electric vehicles, according to Saurabh Agarwal, tax partner, EY. The proposed change should not be looked at as a deterrent for second-hand EVs. This should, in turn, be a welcome step as it would likely bring down the cost for second-hand EVs till the time margins earned are less than 27.78% of the purchase price, told Agarwal to Mint earlier. How is GST calculated on used cars? According to news agency PTI, GST will apply only to the value representing the margin of the supplier, which is the difference between its selling price and its depreciated value. Example: a registered person is selling an old and used vehicle to a person for 10 lakh rupees, and his purchase price was 20 lakh rupees. Under the Income Tax Act, he has claimed a depreciation of 8 lakh rupees. In this case, he is not required to pay any GST as the margin of the supplier, i.e., the differential value of the selling price 10 lakh rupees and the depreciated value, which is 12 lakh rupees, is negative. In case the depreciated value in the above example remains the same at 12 lakh rupees, and the selling price is 15 lakh rupees, GST will be payable on the margin of the supplier, i.e., on 3 lakh rupees at the rate of 18%. Impact on buyers of used cars. If buyers purchase used cars from individuals, then the rates are likely to remain unaffected because of the GST rate hike, but the old car price rate will be affected if purchased from online platforms. Impact on sellers of used cars individuals. The GST rate hike is unlikely to impact individuals selling their used cars to another individual. Impact on used car dealers' businesses. The GST rate hike is likely to impact the business of used car dealers. The GST rate hike from 12% to 18%, a 50% increase, will likely to adversely impact the used car dealership industry. According to the India Blue Book report, the used car dealers sold nearly 51 lakh units of old cars in the financial year 2022-23, far greater than the 42.3 lakh new cars sold in the same period. That's all for our today's episode. We will be back tomorrow again with such interesting contents. Do subscribe to our channel for more such interesting contents.